if you look at the first half of this year, hedge funds underperform. Why is that shocking? It's shocking because normally hedge funds really do better in bad markets. That's often, typically it's strong markets that don't help equity hedge funds very much because you're hedged, hopefully. And so market going straight up isn't your friend. Well, that usually means that you catch up in that performance and then some in a more difficult environment. But you look at the first half of every year, the last 10 years, there's only been 1 year where the equity hedge fund index actually did better than the market. That was 2015 in the first half, and it was only by a couple of percent. That's pretty shocking. What does it tell you? It tells you that there are a whole lot of people out there doing a whole lot of trading, but not generating a whole lot of return. So who are you? Who are the sheep? Look, I think, frankly, I think when I look at, for example, many of the people that have worked for me and have gone off and started their funds, I mean, it's an exceptional group of alumni that we have out there. I think there are immensely talented people. But I think more and more these days, when I look at the hedge fund world, there are fewer and fewer people that you really feel like you can actually talk to and come away with a lot of value added in your conversation. They're too focused on trading. They're too focused on having to have only needing to own a stock that has to perform that quarter. And from my perspective, I don't see how you can succeed. And so I think the fact that everyone is focused on having very narrow risk limits and on short-term quarterly performance, I think means ultimately that they have become fundamentally worse investors. So look, I think that just means that there is alpha out there, but it's going into fewer and fewer hands.
So the hedge funds are the sheep?
I think the hedge funds are no longer the wolves. That's probably the best way to put it.
I'm still not clear on who the sheep are. Are the sheep like, the Davy Day Trader Global are the sheep, large systematic investors? Who are the sheep?
I think it's everyone who is being pro-cyclical, right? I mean, I think so in a way that would be quant funds. It is short-term traders. It's, in a sense, a bit of all the above of what you mentioned. I think ultimately in this environment, if you can't go and withstand some pain and think through insanity on a given day, you are going to end up giving up money to the person who can.
Have hedge funds underperformed because there's something wrong with the hedge fund model?
I think what's happening in the equity hedge fund business is that the amount of money in the hands of people that are true investors has gone down, and the amount of money that has flooded into the hands of people or in business models that are structurally challenging to invest in is very high. And look, I'll give you an example. I had a person work for me who was exceptional, a very, very talented guy. And he got a remarkable offer some years back to go get $1 billion in capital right off the bat from one of they call the pod shops. And essentially they would give him 20% of the profits, $1 billion of capital. That's an incredible deal when you're 32 years old. I was sad to see him go, but I told him, look, good news, bad news. This is a great deal for this kind of deal. And I will be supportive of you if you want to do it. And I wish you the best. Now, here's a problem. My comment was, the negative is that when you look at how you have made money with me investing over the years, it's by being a really thoughtful, high conviction, medium to long-term investor. And if you had a 4% stop, you wouldn't have made a penny in the last number of years, and not a single thing you've done hasn't had a wild swing before it ended up being profitable at the end. So look, he wanted to take his chance. He did. Within 13 months, he was out of a job. Now he's ended up landing successfully eventually, fortunately, and I think that's a good thing. But look, that's the problem. There was the money out there. If you're that 32-year-old talented guy, it used to be that there were plenty of funds to work for that were true investor funds. It used to be that you would get seeded by people to go and actually have a real fundamentally driven business. Now the money is so easily available from many of these pod shops, but the problem is that that money is very, very low risk tolerance, and therefore you have to invest in a totally different way. And so when you look at where the money has gone, the reality is the amount of money in the hands of real, what I would call real hedge funds is shrinking by the day, and in the hands of machine funds, if you will, one from the other, have gone up. I was on the Yale Endowment Investment Committee for over a decade. I run the New York Public Library Investment Committee as a trustee. And so I look at it from that perspective as well. I will tell you, it's hard finding hedge funds that you really feel excited about giving hard-earned, precious, scarce capital to go and invest for 5-10 years and really be able to sleep at night.